So we have Walmarts are closing, McDonald's are closing, banks are closing, 12 reasons why we are going into a recession, and I will show you, and 53% of Americans can't save a penny. Oh, and cue the fire, number 2, everyone is financially stressed out. And I need to, I come bearing a big poop sandwich. My Bitcoin prediction, no, sorry, I got to take one for the team. Because when you say it goes one way and it goes the other, I gotta eat the poop sandwich. I'm pretty sure that corn is going to come out the same way it just went in. Here, if you took a short on that, you can have a bite too. I did not short the corn. I mean, McDonald's, I would short. The corn, always not good. You know when you're fighting against your favorite team, and you're like, come on. It's so painful too. Guys, look where we're at on McDonald's. You are so far into that Lux algo zone, and this was a falling wedge. Price target, right, Luke? Right on target? There it is. We hit the price target from a falling wedge. Trade like this could be found in my bear market course also. I'll carry it over one more day. Today's it. I know I sound like a used car salesman because I'm running that Easter sale. So if you would like to cherry pick any course of mine, grab it down below to what, 70% off? 70? Oof, that's a good one. $297? It's actually more than 70% off, but do start with swing trading, then go to bear market. But I'd be putting in, I'm not a betting man here, but if I was, and I don't like the McDonald's, I'd be shorting it right about now. I'd say be careful on that short. Take your profits because you're above the 200, okay? Just like the Bitcoin, above the 200. Not wise. Or should I say, don't be greedy. But breaking news. I'm loving it. Oh, not loving it. Sorry. You know what? There is nothing good at McDonald's. Like that is the grossest. I don't know. I don't know how you. Maybe I can have French fries. Okay, I'll give you that one. And I do like their Diet Coke. And the reason why you like their Sprite and Diet Coke is because they freeze their lines. That's a little secret. Makes the carbonation more bubbly. So your Sprite's like, oh my gosh, why is McDonald's so? That's why. So they have two things that I would at least try. So, but McDonald's slashes pay. Ooh, gone. Well, that would actually help their stock price, right? Slashes pay, closes offices, and lays off workers. Always helps out that stock. And as you can see, not too much going on at Mick Hamburger U. What is this? The Hamburglar University? Not too much. People leaving, not going in. These are usually things that happen prior to a recession or in a recession. Same thing with Walmart. Walmart halves Chicago stores to just 4 as losses mount. Also, when people just run in and they steal all they want and they can't get in trouble for it, I would probably close it too. And I know the people get mad and they're like, Lightfoot out, next clown in, change nothing, okay. We'll try this again. Sorry, that's just politics. Retailer says it hasn't made money in 17 years in the city. Well, along with third largest U.S. cities, high crime rates have drawn attention. Well, you can fix that. Or you could just let the world burn. That's okay. That's what you want. Also, before I forget, because you're like, well, when can I buy Bitcoin? When can I buy McDonald's? You can always turn on this little indicator down here. Turn it on the week or the monthly. When it goes green, you buy. I call this is my dumb indicator. You'd buy Bitcoin here. You would sell it here, but what do I know? You are actually so overextended right now. But oh, the FOMO, doesn't it hurt? It's kind of like what you felt when it hit 70,000. You're like, we're going to 100. Also, just to let you know, real quick, all these white lines, it just follows the NASDAQ. It's just a little more pumpy than the NASDAQ. And I say, if we're going into a recession, what do you think is going to happen to the NASDAQ? Correlation. Causation? We'll see. And that's why it is so hard to look at macro and then go, this is what's coming. I mean, everyone and their mother can see it. It is a tsunami that is going to hit the shores. Well, it hit. Now we're just like, okay, how bad is this going to be? A chief economist who called the 2008 recession sees signs that the economy has already begun to unravel, and says a recession will be apparent as early as 3 months, 4 months. And I say, I can give you 12 reasons right now. And those 12 reasons do not include Emperor Palpatine. Very nice purple there. Janet, because she's going to tell you, Yellen downplays banking woes. Everything woes. People woes. Says the world economy has improved. Pause? Or pause for effect so you can eat her poop sandwich? There's no way. Come on. I mean, you and I and everyone else that is hitchhiking knows this economy, everything that's going on. Why are these girls hitchhiking? Come on, girls. You're going to get yourself in trouble. That's a terrible Getty image, CNBC. But 53% of Americans say they don't have anything, nothing, no savings at all. Well, here's 3 tips to get started. Tip number 1, you might put away 6 months of expenses right away. Well, the problem is we're all broke. We can't even put away a penny. And I mean, even with our pennies that we put in the bank's like, sorry, we lost it. It's all gone. And you guys are feeling it. I'm feeling it. Everyone's feeling it. 70% of Americans are feeling financially stressed. New CNBC survey finds. You know, it needs to be new. Actually, and this is kind of interesting, more women than men admit feeling financially stressed. Don't ask my wife. She's like, the card works perfectly fine. Coming in from Jason Hartman of Bank of America. This guy's giving you a dirty dozen. 12 recessionary charts. ISM, negative 46.3. You don't want to drop below 50. Recession. All right, there's one. See, manufacturing. Yep. And it's gone. And how about coming in at number 3, global EPS growth from B of A, and it's gone. It's all gone. Something that I have beaten in your face time and time again, a yield curve. Oh, let's see if it's as bad as the one that yes, that is bad. We are in the 1970s bad. That's when you have the 2s and the 10s. That's when it looks like this. You're gonna get a big fat gray bar. We are in it. Well, we're at the beginning of it. You're pulling into the parking lot of the baseball game. Maybe first inning, possibility. With the banks, okay, maybe I'll give you the first. But it takes time. The housing market, the everything market, it just doesn't all of a sudden overnight. But then you'll see those stories, which it does. It just comes out of nowhere. You're like, wow, didn't see that one coming, even though we knew it was coming. We just don't know what. So there you go. And supply cuts not boosting oil prices. So the reason why they're cutting supply is because they're smart enough to know that you're not going to use it. It's that whole supply and demand thing. You need oil because it's a strong economy. Not a strong economy, you got to cut. And then coming in at number 6, weak PMI and earnings, negative payrolls. That's always joyful. Coming in at number 7, what about global house prices falling? You got house prices, you got all those buildings that you don't go to work in anymore. Those are collapsing. But market went up today. I know, just trade the charts. Well, Bitcoin, tough one. Also, you still have so many hedge funds on the other side of these trades betting against this market, shorting it like crazy. They did make $7 billion. So congratulations. Maybe you're making up for all your failures over the last 12 months. So the reason why I show you that is because these short squeezes, oh my gosh, they're exhausting. Bear market short squeeze. That's why whoa, what's going on? I thought it's all going to zero. Nope. That's the name of the game. You just have to be a little bit smarter than a hedge fund, dude. It doesn't take much. Maybe 3 brain cells. I only got 2, so I'm short. I have to use other people's. But guys, you can make money on this, like global housing prices. Not just that, commercial real estate. This is what I took out, was it last week, and I put that, I'm like, this is paper trading. If I could, that's where I would put on a short. See that? That's your 200-day moving average. You're below it, you short it. You're above it, like Bitcoin, be careful. On this play, you've already made, I know it says negative 10.76%, but you get to make money the other way. So when it goes down, your account goes up. And those are quick plays, not like a housing market, which takes time, like UK, Australia, Sweden, Canada, New Zealand. Look at all these. Down 3%, 1%, 3%, 9%, 13%. New Zealand, 14%. Coming in at number 8, coming U.S. credit crunch to weaken U.S. labor market. You're already seeing that. That is also where banks tighten lending standards and no one trusts anyone and everything freezes up and the whole thing burns down. But then the government will step in, and that's why we love the government and Gavin Newsom in California. You can get a free home. Look, right? If you're down and out, you don't have a job, don't have any money, the government will help you. And then you'll fail at everything, and then they'll come in and all their friends will pick it up on pennies on the dollar, just like they did last time. It's same game. California to front the 20% down payment was zero interest for home buyers with incomes up to 211. But if you make 212,000, you're starting to get into that rich zone. What could possibly go wrong? I don't know. Maybe I should move back to California and buy a house for zero. It worked perfect last time. Actually, it was that 07, 08, right when these programs started to take off, right at the very top. Let me say this again. When you know you're at the top, you see things like this. I mean, look at this. You could receive 20% down payment and all closing costs at 0% interest rate. Oh my gosh, what are you guys calling this? A new program, the California Dream for All Shared Appreciation Loan Program, also known as the CDVASAL. When it all goes down, they won't even know the word that they used that crashed everything. Okay, European bank lending is contraction. Yes, they're not lending. See, right above my head? And neither are they over here. I mean, you won't even lend to your neighbor, and they just came over for a little sugar. An egg, which I knew the egg. I get you. That's like the golden egg. You're like, I'll give you sugar, you can't have our egg. And then coming in at number 10, weaker labor market allows Fed to cut aggressively. Nope, keep us underwater there, Jerome. And then coming in at number 11, which everyone is front running the Fed. Not as much as I thought you guys would. This is like baby. You're like, oh, is it recession? Or are we going to not fight the Fed? We say sell the last rate hike. Just like in the 70s and 80s, Hartnett says sell the last rate hike. Investors are too optimistic on rate cuts and not pessimistic on recession. It's okay. It's okay. Above the 200, trade it. Swing it, baby. Swing it up, swing it down, and then get ready for the biggest bear market of your life. Well, that's if you're into these things called securities and equities. Because as they say, B of A Global Equity Derivatives Research Team, whatever that spells out, shows that recessions are reliably, it's going to happen. It's negative for equities. It always is. What do we got? Since 1929 to now, I mean, you're looking at, and I've showed you in the charts, somewhere between, oh, hey, thanks, Michael. Somewhere between negative, you're going to lose somewhere between negative 86%. I mean, unless you're Team Janet and you're like, and Biden, strong as hell. Everything's going to be improving. We have so much to look forward to. Maybe even a war. Who knows? Negative 54%, 48%, 57%, 34%. And just to let you know, when Bitcoin, right, in the last recession, did drop down below 4,000. I'm just saying. And like always, things that go up come down. Things that go down go up, like McDonald's. I mean, it's like it's an 80% chance that you're going to sell off in that area. That's it. Maybe even higher. I would go, you do your charting. Oh, wait, you don't know how to do charting? We'll take advantage of my Easter sleazy salesman offer that I pushed like one more day. Sorry, I just know because you guys are gonna be like, hey, when are you gonna do another one? Then I'm like, where were you last time? But you guys, thank you so much for always making it to the end. I love you, and I will see you tomorrow.